Investors and traders, welcome to the channel Market Chart Pattern. Today is 30th of April 2025. This is going to be a midweek update, and it's going to be a little quick one. Just want to see how our patterns are doing and the key levels that we have been watching in the markets. As always, this video is for educational purposes only, and it is not a financial advice. So what we are looking at is our daily chart for the Dow Jones Industrial Average, the cash chart. It is also our market timing chart. We had two key dates come in, one on the 7th of April, and then we have another key date coming on the 21st of April. The one on the 7th of April formed an external low, and the one really important date on the 21st of April formed an internal low, and since then we have actually seen the markets move higher. Now make note of the for future key timing dates. Again, we have to give 2 days on either side for these dates. So 8th of May, we have got a minor timing coming in. 27th to 28th of May is an important timing, and 2nd of September, which is quite a while ago, in future, we have a key timing coming in as well. So make a note of these. Now let's take a look at the US dollar. Let's start with the US dollar. So the US dollar was stronger today. Dollar is holding the 99 and 98 levels, which is good because those are really critical levels. And now we have seen the highest move of this magnitude in the previous rally, which actually failed. So we haven't come near that yet, but if the market begins to get above 100, that is going to be a good sign for the strength in the US dollar. Moving on to the weekly chart, here we can see that the previous week, the last week, was a positive week on a closing basis, and this week the market is actually getting stronger in the US dollar, is getting stronger, staying above the 61.8% retracement, which is 99. So again, as long as it remains above 99 and 98 levels, this is where we have a potential pretty good support coming. If these levels of 98 are broken to the downside, then the dollar could actually accelerate to the downside. And on the flip side, if we take a look at some of these currencies, such as the British pound, so the British pound is also at a resistance level right at the 1.272, expansion of this entire range right here. And not only that, but it is going and testing it for the second time. So it's a kind of a double top formation. Of course, the top is not confirmed yet, and if we take a look at this on the daily chart, you can see the market is just hovering around this level. And if we move over to the Euro USD, excuse me, let me choose the correct one. We are using the FXCM. Here we can see as well, look at this market. It had a spike higher, and now it's just kind of moving sideways. If it breaks this trend line, we are looking at this market move lower. Let's just take a 38.2% retracement. Yep, so it can come back and test this low of the 15th of April quite easily, which will just be a 38.2% retracement level. And then if we just take a look at this on the weekly chart, here you can see that it formed this ABCD one-to-one price projection. Let me just move this one a little bit over here, right there. And we are seeing the market actually not able to get above that, so that's just the sign showing that there is strength coming into the US dollar. And if we move over to the interest rate markets, let's take a look at the shorter end of the curve. This is the 2-year treasury note. It's not, oh yeah, this is the weekly chart, so I wanted to take a look at the daily chart. And here what we can see is, here we go, I believe we are actually, the yields are moving lower. We could actually see 2.94 or 3% roughly. Of course, there will be some rallies, but I'm expecting those rallies to be actually sold. So the yields moving lower on the US Treasury note indicates the Fed will be actually surprisingly are more aggressive in cutting their rates. So what they could do is the next meeting, perhaps they might not cut the rates, but the meeting after that, they could actually drop a higher interest rate cut. So, for example, rather than doing a 25 basis cut, they might actually do a 50 basis cut. And normally, what we have seen is that when Fed has started a aggressive cycle, a cycle of rate cuts, they have actually gone in a bit of an aggressive manner. So they would actually go on to a 50 basis point cut, and if very necessary, might even do a 75 basis cut as well. So this is what we are looking at. This 2-year trading note is indicating lower yields in my opinion, and I think we might actually get, although Fed said 2 rate cuts in 2025, we might end up getting 4, or it's also possible 2, but of a bigger magnitude. So that's how I'm interpreting this data. And then if we take a look at TNX, which is 10-year treasury yields, something really interesting. I'll show that on the futures chart. But here a little bit of a mixed picture, because today we had the GDP data come out, so it was actually negative slightly for the quarter. But we had a price action, at least in the equity markets, which is described like bad news, good action. So that is just suggestive that actually even the equity markets, they are getting stronger, because they just kind of negated the negative news. So further rally to take place, in my opinion, we'll just discuss that. But here what happened is that the yields did go a little bit higher, 0.10%, but there was a lot of movement intraday. So I'll just show that to you on the futures charts. This is the futures chart, and let me actually move over to, let's say, a 15-minute chart. And here we go. This is when the news came out. It was with regards to the GDP data, I believe, jobs and some GDP data, and it was a massive move of 0.5%, nearly 0.5%, half a point, 16 seconds, pretty big move. And what is really interesting is this. Well, not only that, from a pattern perspective, it came from this see, I believe 61.8%. We'll take a look at that. But it was as if there was a really big buyer which is just waiting, was just waiting for the market to drop, and they started to buy. And the interesting part I'll show you is like this. I believe this was the 78.6% retracement. There you go to the tick, and this is where the buyers were sitting, right to the 78.6% Fibonacci retracement, and there was just so much power. Not only that, they bought it all the way right here, they actually took these highs out as well. So that is pretty a bullish price action, on the back of a negative uh, bad news in terms of the GDP. But it shows the bullishness which exists in this market, which indicates the rates, in my opinion, are likely to move lower, because the bonds move inverse. So where we saw some resistance come in was right at the 61.8% retracement from these highs to these lows, and then we also have the one-to-one price projection completing a little bit higher. So so what I would like to think is, although the market is bullish, but it's just been going up for quite a few days, as you can see that. So 1, 2, 3, 4, 5. So it's getting into a zone where it could pause, go sideways, maybe pull back a little bit. And if it did, I'm not expecting a pullback greater than this magnitude, because this is what the symmetry is. And we'll see when, but this is the region the market is moving into, where we could see some resistance come in. Overall, I think it does look like a bullish market. Look how bearish this move was, but it has been bought up right to the 61.8% retracement on the long bond futures front. Here we go. And so this is the pattern formation we were watching, and we saw this market kind of consolidated right here with a bearish close for the day, down minus 0.27%. And I think the market has just opened now, and I think the open is slightly lower. So this is the region where I can see some consolidation take place. It's also, I believe, right at the Here we go. No, 61.8% is a little bit higher. So these are long bond futures, a slightly different kind of a pattern formation. Also, the notes getting into a region where we can see some consolidation and perhaps even a pullback. But looks like the even on the longer end of the curve, the yields might actually be pulling lower. That would be good for the risky assets. Now let's take a quick look at the Bitcoin. Here we go. So the Bitcoin is just consolidating right here. Not much difference to what when we discussed it previously. And then if we have the gold, so the interesting thing about the gold is now it's just pulling back. Here we go. So gold has been really bullish. This is how much it had pulled back previously. Yeah, I think this retracement is getting very close to it. The only difference is the last time it was only 3 days, but the pullbacks were quite significant each day, and here it's just taken several days. By the looks of it, maybe the gold is finding resistance in this region and can pull further lower. Just wanted to reiterate this. This is the month of March is closed. Today was the last trading day. What we see is right into this region or the zone where we have this it could go as high as 3650, but I think it's getting into this region where it's really overbought. You can see the parabolic price action. We could see some pretty good pullback happen here, but gold remains pretty bullish right here. But it's also reaching kind of the upper end of our target as well, so we should be a little bit careful and keep on watching it really carefully. Now let's take a look at the equity markets. So let's start by taking a look at the S&P 500 cash. It's moved right between the 50% and 61.8%. The chances are it's going to hit this 56.50. That's been our target, with further target of 57.50, where we will also complete the ABCD very close to this point C. Then we take a look at the NDX, which is the Nasdaq 100 cash index, and what we can see is that it also had a bullish close today. Ideally, I think it's moving right to the 20,300 level, right into this box configuration we had drawn. And then if we take a look at the Russell 2000, it's the weakest one. It's just going sideways. I would have liked to see a positive close, but the close wasn't positive by this data. Let's take a look at this IWM. Here we go. So we had a positive close on the cash market. That's really interesting. It needs further work, the small caps, because of the interest rate dynamics, trade wars. I think they are impacted quite a lot, but we should see some further improvement here as well. Dow Jones through the eyes of the futures. Here we go, it's right at the 50%. We have an ABCD where we can see this market moving into this box as well. And then finally the NYE, New York Stock Exchange Composite Index. Now there is a pattern right here. If we just draw this line like this, it's just right battling into this resistance region coming in from this trend line. But if it is able to get above that, and today you can see that at one point it was down a lot of points, but it recovered that. But if there is going to be further strength, that would be pretty bullish for this, because it would have broken this negative trend line pattern formation. So this is what we are watching in the key US markets. So we have covered the dollar, we have covered some of the major currencies such as the British pound and the Euro USD. We took a look at the interest rate markets, the short end of the curve with 2-year, 10-year, and then long bond futures. And then we covered the S&P 500 cash, Nasdaq cash, Russell 2000 cash, Dow Jones futures, and also the New York Stock Exchange Index. It does look like the key timing that came in on the 7th of April is really important. It is holding. The low is being held at that timing. Also, we were hitting a key price level as well. So completed pattern, and we have seen a nice rally off this. I think slowly, but the equity or the risky assets are beginning to look much better, and the chances are Of course, there's going to be at some point a pullback that can happen anytime, but it looks like as long as 7th of April lows are held, we are looking at higher prices in these indices. So this is what we're watching in the markets. Thank you very much for watching the video. If you like our technical analysis, please do subscribe to the channel, and if you do, then hit that bell icon button. I will really appreciate that. So thank you very much. Good luck, good trading, and speak to you guys soon.